afternoon. My name is Janine and I'm in research at Wesgro, and it gives me great pleasure to be here with you. And thank you for the opportunity to be able to share some thoughts on both the global economy and current developments and the impact that it is having on not only South Africa but the Western Cape as well. Before I start, just about Wesgro, and our MC has kindly shed some light on us, but at the broadest level, Wesgro is the official tourism, trade and investment promotion agency for both the Western Cape and Cape Town. And our overarching objective is to attract international investment as well as domestic investment to grow the exports of goods and services, and by doing so to grow the local economy and create sustainable jobs. And within the agency, we have a number of units, as you can see on the slide. And I'm happy to say that a number of my colleagues are here with us today. We've got the head of the agribusiness unit, we've got a key player in the business and growth and retention services, part of our investment unit as well, so we are very well represented. And I'm part of the research team, which focuses on analytics and data. So without further ado, these are a couple of things of our achievements of the past 6 years. We've had, despite really tricky global economic conditions, the agency over the past 6 years, we've had 82 projects, investments of over 21 billion. We've had strong export growth, the number of export declarations, estimated export value of over 27 billion. We've had a good recovery in tourism, and we are very encouraged by what we are seeing in tourism after a couple of very difficult years. And our film agency certainly continues to go from strength to strength, and thanks in part to the Cape Town Film Studios as well, which we're all very familiar with. Okay, on to business at hand. The global economy. I want to start with this. I'm not going to spend too much on this, other to say that the global economy today is in a far worse position than it was at the end of last year. And the reason for this is twofold. October last year, we were all very optimistic in terms of the global economic recovery, as it appeared that we were moving out of the restrictions by COVID. Then Omicron broke. That certainly led to restrictions again, not to the same extent as hard lockdowns, but we did see supply restrictions, we saw global supply chain issues, and with that, we certainly started seeing inflationary pressures as well, as prices started to increase. After that, we certainly hit, the big challenge was the Ukraine and Russia developments, and that really has placed significant pressure on the global economy, and largely for a number of reasons. And we are likely to see significant economic pressures as a result of this, and economic and financial conditions remain extremely volatile now and will into the foreseeable future until we have some clarity as to where this is going. And the reason for this is we're seeing tremendous constraints in terms of supplies, and that is pushing up prices, and increases prices, as we all know, results in reduced economic consumer demand. And just to contextualize this, the USA inflation in March was 8.5%, the highest since 1981. We've seen the Fed raise interest rates twice since the beginning of the year, the largest increase in 22 years. We look at the UK, inflation in March was 7%. The Bank of England has raised interest rates 4 times in recent months, and their bank rate's currently sitting at 1%. South Africa, inflation 5.9%, beginning of in March as well. That's really at the top end of the 3 to 6% inflation target band, and it's likely to actually move through 6% as well. Are we going to have more interest rate increases? Potentially, yes. I'm not going to say too much about COVID. It is real, it is still very relevant. We have seen in the Northern Hemisphere, which tends to be a couple of months ahead of us, they have had a spike and it's come down. We are seeing an increase in numbers closer to home at the moment as well. And the risk with this is that it really places pressure on all systems as well. And IMF has come up very strongly and said the risk of not vaccinating a larger percentage of the global economy opens the door for variants or more destructive variants to mutate as well, though. Another one that is interesting is in terms of vaccinations across the world, and there's a huge gap between high-income, middle-income, and low-income countries. And Africa, you can see Africa is a lot lower, with different colours compared to the rest of the world as well. And we really are seeing that there's a huge divide as well. And it's not necessarily that vaccines haven't been made available to Africa. There's been a very slow uptake. There's hesitancy towards vaccinations, and also for some reason Africa has had a lower death rate from COVID than what we have seen in a number of developed economies as well. So that is something which it's still with us, and I think there's definitely COVID fatigue, but it really is a reality still as well. Russia and Ukraine, I'm not going to say too much about this because it really is evident every single day, but the reason for the significance of what is going on in the Baltic area, and it is really of global consequence, and the reason for this is that Russia is a commodities powerhouse. They produce a multitude of commodities and export a number of these as well, and due to what's going on, we are seeing supply restrictions, and that is pushing up prices. And when I think about Russia, I think it's a global play in terms of energy. We think oil, we think gas, we think coal. It's a global play in terms of agriculture, especially in terms of seeds, grains, and pulses. And collectively last year, and this is a stat that's been banded around a lot since it all broke, but Russia and Ukraine collectively accounted for more than 30% of the global wheat export market last year. Russia is also the largest exporter of nitrogen fertilizer. That's had a huge impact in terms of prices, and more than that, it is one of the largest producers of palladium, nickel, iron ore, and so forth as well. So where we are seeing this coming through, which is affecting every single one of us, as we see prices going up via petrol, fuel, energy, and food. So we're seeing higher commodity prices, we certainly are seeing supply chain disruptions, and we are seeing volatility in global markets. You just need to look at stock markets over the past week and see what's going on as well, and 6 weeks prior to this as well. Commodity prices, I did want to share that. That's just really an indication of the volatility that we have seen since the 24th of February, particularly in oil and particularly in food, and specifically wheat, corn, maize, and so forth as well. The Ukraine is one of the largest producers of sunflower and sunflower oil as well, so that's certainly, and you'll see on the shelves that the prices really have increased. And where this really all comes together is food. And food, by the very nature of how income baskets are historically made up, a larger portion of income is spent on food by poorer individuals. And as you can see from the graph on the right, the food share for sub-Saharan Africa is close to 40% versus about 17-18% for the more developed country and advanced economies as well. So that really does place pressure on global food concerns, which are starting to come through. Africa, very briefly, a number of African countries are dependent on Russia and Ukraine for their food consumption needs as well. Specifically, more so in Northern Africa than in Sub-Saharan Africa. And we are seeing that even prior to developments in the Ukraine-Russia developments, a lot of these countries were really grappling with high international food prices, high fertilizer prices, and drought prior to February this year as well. This really has been an added factor that is negatively impacting them. And Sub-Saharan Africa imports 85% of wheat, of which a third come from the Russia-Ukraine area as well. So it really is of consequence. But that said, the run of commodities that we are seeing is beneficial to the handful of countries that do actually successfully produce and export commodities as well. It's not just oil and gas, it certainly is. We think about, as we see this huge push towards a greener economy globally and commitments that are being made across the globe, much of which were firmed up at COP26 last year. A lot of these metals, which are critical for renewable energy, both the creation thereof and storing, are found in Africa as well. So that is likely to see renewed demand, a significant increase in demand for these metals as well. Copper, nickel, lithium, and so forth as well. And one of the previous speakers was talking about the ESG, the environmental, social, and governance factors, and impact funding and so forth as well. And certainly a year ago, it was a very, very big topic. But from a sustainability point, we've seen tremendous progress and a shift in recent quarters towards commitments made towards the decarbonisation of the global economy as well. In July last year, we saw the European Commission pass the Fit for 55 deal, which the objective of which is to reduce greenhouse gas emissions to 55% of what they were in 1990 by 2030. It's a tall order. It does form part of the European Green Deal, known as the EGD, which is going to impact all of us in some way going forward. And really, the European Green Deal is the bellwether for new generation on environmental regulations and trade as well. And one of the big and unprecedented things that came out of COP26 last year was the just transition, which I'll talk about more further on in the presentation. That really was very specific to South Africa, where we have been allocated $8.5 billion worth of funding to transition to a greener economy as well. Closer to home, the African Development Bank, the first ever multilateral bank, has committed, they are endeavouring to commit 40% of the annual financing towards climate change as well. So really are seeing a different energy in terms of sustainability going forward as well. This is a question I'm asked regularly. Are we seeing a paradigm shift, both from an economic perspective and a political order as well? And it's not unwarranted, the question. You think about, in light of recent developments, we saw Russia being annexed from a number of formal trade deals. They're no longer part of the most favoured nation trade deal. We think about, does this provide opportunities to strengthen relationships between other European parties, or hypothetically Europe and the US? We talk about shifting global supply chains. These have been tremendously, they've come under tremendous pressure in recent years. I think really what kicked it all off was when the Chinese and US trade debacle / situation developed, and that really shone a light on global trade supplies. And this was just, this really kicked up to a higher gear when COVID broke as well, and with new pressures in terms of reducing carbon emissions and certainly geopolitics. Global supply chains have become increasingly fragile, and are we going to see more localization as well? Geopolitical tensions, that speaks for itself. And then cryptocurrency, it's an incredibly interesting topic, and I think there's more going on behind the scenes at multinational levels and central bank levels than most people actually realize. But the role of cryptocurrency and the traditional financing networks as well, though. Cryptocurrency is enormous, the value of cryptocurrency, and I want to share some stats with you. There are over 18,000 cryptocurrencies today, there are over 460 crypto exchanges, and the market cap of cryptocurrencies amounts to $1.7 trillion. And daily, within a 24-hour period, more than $91 billion worth of crypto is traded, mostly Bitcoin and Ethereum. And certainly, as the burgeoning crypto world engages increasingly with our traditional financing world as well, how are they going to regulate this? So this is really a very interesting topic, and it's going to become more and more real as we move forward as well, as we see various countries are becoming more tolerant of payments being made in digital currencies as well. South Africa, I do want to touch very briefly on this. We saw economic growth recovering well last year. Yes, off a low base, 4.9% in 2020. 2021 for the calendar year, that's a strong bounce back from the decline of 6.4% that we saw last year. And the recovery was really underpinned by the gradual reopening of both the national economy and the global economy as well. We did see strong momentum at the start of the year, but as the Russia and Ukraine developments have unfolded, and the indirect effect thereof in terms of price increases, and oil, fuel, food, etc. as well, and more recently the rand has taken a bit of a beating as well, though. So as interest rates around the world are increasing, we've seen outflows of foreign investments. So on the one hand, commodity prices are good. High commodity prices and the run that we've had on commodities for the past 18 months are very sound for our balance of payment, because it earns foreign exchange and for our fiscus, and we have had a better than expected fiscus. But in the same breath, it has significant impacts for inflation, and that certainly is coming through loud and clear as well. COVID, not going to say too much, but we are seeing quite a sharp increase in COVID numbers. 7,500 new cases on the 10th of May, which was yesterday. That's up from about 4,000 last week as well. So it's still very real and relevant as well, though. According to the latest stats yesterday, about 45% of our nation are fully vaccinated, and that still falls short of the 67% target that the government had set. Progress, it's important to take note of progress. We all tend to err on the side of what hasn't been done, so it's important, and I want to focus on a couple of key and critical developments that have transpired, and something which is really relevant at the moment is progress in terms of electricity. And as most of you know, or for those of you who don't know, at the end of 2021 there was a renewed commitment made to the Renewable Energy Independent Power Producer Procurement Program, commonly known as REAP, to you and I. And we had a commitment by the DMRE and the IPPO to confirm a target of producing 11.83 gigawatts by 2030, and that's through various various types of renewable energy as well. And bid window 5 was really, really well received. A number of Western Cape bidders were very successful in their attempt as well, and bid window 6 opened in May as well. So there's lots going on that front as well, though. And this is where I spoke about the just energy transition. South Africa has the most coal-intensive economy of the G20. 87% of our electricity is generated by coal. And obviously this really makes it very challenging for us in terms of meeting carbon emission reductions, which we have signed as a national government in terms of the Paris agreements and a number of other climate change regulations or commitments as well. And the just energy transition, a number of economies, the States, the US, a number of European economies, $8.5 billion towards assisting South Africa in making this transition to a greener economy through sustainable ways to switch from coal to a greener type of energy. And certainly from a community perspective, they're very cognizant and mindful of the impact that this will have on the majority of people who are in the mining industry as well. So that's really a very positive thing as well. We've had the recent tabling of the climate change bill, and then the preparedness with the European Green Deal. And this is one of the elements of this commitment that is going to impact all of us going forward, because indirectly, because part of that is that come 2023, the EU is going to start imposing taxes on imports into the EU who don't comply with the required carbon footprint. It's going to start with a very small number of products initially, but that is going to expand. So cast your mind 10, 15, 20 years ahead, all of our exports are going to have to comply with it. So it's critical that we actually provide the infrastructure to enable our exporters to become compliant with that. Other developments, Operation Moderator. It's a joint initiative between the Presidency and National Treasury. We continue to see good progress on this, and people always say, well, it's only 7 out of 19, but it's 7 important ones. We look at the progress we've seen in electricity. We look at the progress we're seeing in infrastructure. SONA addressed infrastructure challenges that we do have. They are very, very aware of them, and encouragingly, the Western Cape government is critically aware of these as well, though, and is addressing our infrastructure challenges as well. Electricity sector developments I spoke to as well. Budget revenue, we have had revenue windfalls as a result of the good commodity taxes and so forth that we're seeing, and our budget gap has narrowed. We're also seeing a reduction in our debt to GDP ratio, which is always one of the ones that we watch very closely. And then encouragingly, the fourth Investors Conference that concluded in Johannesburg a couple of weeks ago, or months ago now, really well received. You know, we're at 95% of the targeted $1.2 trillion rands worth of investment set over the 5-year program. And it's been incredible to watch commitments that have been made, both by international firms as well as local firms as well. So that's really encouraging. Western Cape, I'm not going to spend too much time there, but we were, the economy really surprised on the upside. In 2021, we had growth of 4.83, and we were predicting 4.3, and we saw strong positive growth across all sectors besides construction, and that is, you know, that's really encouraging as well, and really in step with what we saw, similar trend to the South African economy as well. Obviously, we do tend to mirror quite closely. This slide is always very interesting because it actually gives a really good breakdown of the Western Cape economy, and in particular, the role that the tertiary services plays. So for the green, starting wholesale and retail trade on the right, probably at about 4 o'clock, all the way around to, if we go clockwise, all the way up to general government services. That is all the services sector. And as most of you probably know, the services sector accounts for more than 70% of output in the Western Cape economy, and also more than 70% of employment. So it really is a key sector for us. You know, the dominance of this tertiary sector really is indicative of the competitiveness of the Western Cape economy. The next slide really speaks to the previous one as well. This is just in terms of output and shows the dominance of the finance sector. Finance, business services, etc., and that really encompasses a whole lot of things. It's not just financial services. So, and that's really where we are going to see a number of the tech sector coming through as well, and all the services that are affiliated with that. Onto exports. You know, despite really challenging global economic conditions, the Western Cape's exports increased by 22% last year. across a number of countries and across a number of products. We continue to see really good growth in agriculture, into some of them into new markets, and certainly breaking records. We think of citrus that has done exceptionally well from this perceived health benefit of citrus in terms of preventing COVID as well, so that's really been something for us. The next one is, I do need to say something about this because it does impact us. Certainly the direct impact in the short term is going to be trade flows. Russia is it's an important market for the Western Cape, particularly for the agricultural sector. We think of citrus, we think of apples, we think of pears. But if we look at collectively, Russia only accounted for just over 2% of the Western Cape's global export earnings in 2021. And that's important to remember. And in turn, as an import source, it's our key source of fertilizer, so that is where it's going to become very apparent. But it also only accounted for less than 1% of Western Cape's total import costs incurred in 2021 as well. So yes, we are starting to see things, and it has been hard for the agricultural sector. When it all broke, we were in the middle of apple and pear season as well, so that there were a number of products that were redirected towards Europe, and obviously there are phytosanitary issues. If you're not going this route to the market where you expect it to go as well. Citrus is going to be interesting because the citrus market lies ahead in the next couple of months as well, and they are a key market for us as well though. So there's been quite a lot of juggling on the agricultural sector side to try and find new markets as well, which is tricky. FDI flows, also once again, despite challenging environments, globally, economic environments, we've seen strong FDI inflows, and there have been a couple of really big ticket items that have come through. And I think it's really testimony to the province's resilience and services offering that we do have, and we saw that the strong presence of the tertiary sector. And what's been very interesting in recent years is that we've seen an increase in the renewable space, in business services, in tech and so forth as well. And that's really in line with global trends. And we foresee this continue as the world is more and more focused on sustainability and in terms of complying with various climate change regulations as well. That's just to contextualize, over the period 2011 to 2021, more than 16.8 billion rands worth of investment went into renewable energy. That was about close on 21% of total investment into the province. And then we see business services, communication, tech and so forth coming through as well. Tourism, it is one of our key markets. It's had a very tough couple of years, but we are seeing a recovery. It certainly was the rise of the domestic tourist during COVID, as they really sustained a number of markets for us. But we're seeing international tourism recover as well. We're very encouraged by this too, and numbers certainly are speaking to an uptick in tourism into the province. Staying with achievements, I like achievements. The one that springs to mind in the Western Cape economy certainly is, again, it's energy. And this is critical for a number of reasons. We need to be energy resilient in order to remain competitive from a business perspective, in order to grow our economy, in order to attract investments, in order to grow exports as well, though energy resilience is key. It also is important in terms of a carbon reduction perspective as well. The National has made commitments in terms of the Paris Agreement. The Western Cape government has committed to that as well, and that certainly enables us to reduce our emissions as well. We need to do it. And then thirdly, to prepare our exporters to be able to comply with global requirements as well. And one of the big success stories has been the Municipal Energy Resilience Project, the MER, which there are a number of municipalities which are part of this. And basically, it allows them to generate, procure, and sell their own energy. And that really is groundbreaking in terms of ensuring that they are not as dependent on traditional sources of power as well. We have the Atlantis Special Economic Zone, which is dedicated to renewable energy and it's a green SEZ, the only one in Africa that really stands to, we see this going from strength to strength as the world tends to look for alternative investments in renewable energies and so forth as well. COVID has been the accelerator in fast-tracking the use of modern technology like we've never ever seen before. It really is. We find ourselves today in a world that we thought was probably years, if not decades away as well. And the reality is that we're living in a time of unbelievable technological innovation. And there are many ups to this, there are many benefits and windfalls which we are seeing, but the reality is we still have exceptionally high unemployment. The Western Cape might be marginally better than the rest of the country, but it is still unacceptably high and debilitatingly high. And also, as I touched on earlier, infrastructure remains a very real factor, debilitating factor as well, or really is a constraint to economic growth. But Premier Alan Winde, in his State of the Province address in February this year, announced the creation of a dedicated unit to infrastructure. They are critically aware of the role that infrastructure plays. And second to this, our recently tabled provincial budget has also an enormous spend on infrastructure as well. So it really has been earmarked and targeted, and we do see this becoming a very active part of provincial government going forward as well, and it's really, really encouraging too. It's not, yes, there's a shift towards technology and digitization and digital transformation, but it's not to say that our traditional and mature and older sectors are not key. These are still critical and of great importance and of great focus to us. And our existing trade lines, I feel like I've been talking about the African Free Trade Continental Agreement for years, but it is making progress and it does hold enormous potential as we look to intra-trade on the continent. Brexit continues to move along. We watch with great interest as the UK starts to sign new trade agreements with other countries, particularly ones which are in the Southern Hemisphere and have similar offerings to South Africa as well, so we watch that closely. As I touched on, agriculture is key and critical and will remain so, even though it doesn't necessarily account for a huge portion of the economy from an output perspective. It's very important in terms of employment and agribusiness and so forth in terms of exports. Traditional trading partners I touched on, and those are always key to us, and we're always looking for new trading partners and new trading platforms as well. So those are key. It's not an or, it's an and. But the future productivity growth lies in technology, in digitization, in digital transformation as well. And we're seeing that. We're seeing that already in the Western Cape, and we're well positioned to deal with this. There are a number of multinational global economies that are already present in the Western Cape who are using us, who are headquartering here as well. And they're here because of the service offering. They're here because of what we have as well, though. And we're seeing that technology it's traversing across our more mature sectors. There's not one sector that is not being affected by tech, and if it's not coping or getting up to speed with tech, it's going to be left behind. It's as simple as that. It's just the way the world is today as well, though. And the increased emphasis on a green global economy and decarbonisation of the global footprint is going to really, we are very well positioned with the Atlantis SEZ to grow productivity, to produce more in the green space as well, though. So we as the Western Cape are very encouraged by what lies ahead, and it's not without challenges, but we really do feel that we are well positioned to take advantage of this new fast-paced, greener, digitalized and digital-orientated global economy as well. And with that, I thank you.
Bismillah ar-Rahman ar-Rahim. All praise and thanks is due to the Almighty for giving us the time, the health, the space and the opportunity to gather here and be beneficial to mankind. Ultimately, as custodians of the message of the Prophet Mohammed sallallahu alaihi wasallam, we are here to serve and to improve ourselves firstly and to be beneficial to mankind. In that respect, I'd like to introduce the fifth session of the conference, which will be focusing on sustainable finance and impact investing. Similar to our first session, which we had yesterday, the opening session moderated by Dr. Ziyaat Mohammed, where they focused on banking primarily. Today's session will focus on capital markets. But as a precursor to that, perhaps just to reflect for those who missed yesterday's sessions, we had 4 sessions. The first session starting with sustainable finance and impact investing. From a banking perspective, our illustrious panel, our 4 CEOs of the South African Islamic banks, discussed with Dr. Ziyaat Mohammed the value proposition in value-based intermediation, VBI, which was the focus of that session. The second session, we saw our philanthropic instruments in Islamic finance, our zakat instruments, our waqf instruments, and our social sustainability or social finance instruments, rather, focusing on the discussion in sustainable investments. The third session, we saw our regulators speaking about the sustainability of regulation. And the fourth session, more vibrantly, ending of the day, and well done to the ladies yesterday in making the graveyard session indeed a breakfast session for us all. Yesterday afternoon, mashallah, that was quite impressive for the power and I think the impact that came through from that last session there. And we asked the Almighty to sustain that development of women in Islamic finance for us. I think a central message that came through from all four sessions yesterday for me, over and above the numbers, the statistics, the Sustainable Development Goals, is the human impact or the human force required to enable sustainability. And alhamdulillah, looking at the conference, I think we've achieved the first step to sustainability, which in our opinion is unity. We've achieved to come together at this platform to engage with each other on how to improve ourselves as individuals, how to improve ourselves as organizations, how to improve ourselves as communities, and ultimately how we can be better for each other in this global environment. So I'm going to introduce my panel of discussants today to address sustainable finance and impact investing from a capital market perspective. And as I call them out and read their bios, I don't know if it's going to be enough time, they can join us on the stage, inshallah. Our first discussant is Mr. Abdulaziz Davids from former Camissa Asset Management, now known as Camissa Asset Management. Abdul joined Camissa now, at that time Camissa Asset Management in 2008 as the head of research. In addition to his research responsibilities, he manages 4 Sharia-compliant retail unit trust funds as well as institutional client funds. Previously, he was with Allen Gray as a senior investment analyst and portfolio manager for all clients in Botswana and Namibia. Our second discussant is Sister Fatima Vawda from 27-4. Welcome. Fatima has over 2 decades of experience as a practitioner in the South African and international capital markets. She is the director of the Association of Savings and Investments in South Africa. She is the chairperson of the reporting working committee of the Financial Sector Transformation Council and the chairperson of the Financial Services Working Group of the South African chapter of BRICS Business Council. Our next participant, I'd like to call upon Brother Kieyam from Old Mutual. Oh, he's here pretty much. Kieyam is the head of Old Mutual Customized Solutions, a boutique, and chair of the Executive and Investment Committee, which is OMCS. OMCS has investments under management of 170 billion rand, offering both local and global investments across various strategies. Investment strategies include quantitative investments, indexation, hedge funds, and protected equity solutions, as well as Sharia-compliant investment solutions. Our last but not least, Brother Mohammed Vadee from Al-Himayah. Please welcome Brother Mohammed. He is a business executive with more than 20 years experience across general management, operations, information technology, digital transformation, business development, and strategic management. So I've kept their CVs brief because that will take up most of our session if I should continue. with each one of them. Before I commence with the introduction, can you please give my guest a round of applause? So, sustainable finance and impact investing in capital markets. Since its inception, the World Investment Report has provided analysis of direct investment and international production, focusing mainly on downstream segment of investment chain. More recently, and with a growing need to mobilize the vast sums of capital needed to achieve the sustainable development goals which we are discussing in this conference by 2030. The World Investment Report has expanded its focus to the analysis of global financial market ecosystem and or the upstream segment of the investment chain. However, and despite its qualitative differences from foreign direct investment, portfolio investment nevertheless offers a potential source of capital for sustainable development. The ecosystem surrounding global capital markets is increasingly aligning itself with sustainable development outcomes, including sustainable development goals. Importantly, the $2.2 trillion global Islamic finance industry is expected to grow between 10 and 12% in this year due to the increased amount of Islamic bond issuance and modest economic growth or recovery rather in the main Islamic finance markets according to S&P Global Ratings. In fact, the industry continued to grow despite the global pandemic of COVID-19, although at a slower pace in 2019, global Islamic assets expanding by 10.6% in 2020 against a growth of 17.3% in the previous year. So the ratings agency forecasted global issuance of Islamic bonds, or Sukuk rather, to reach 140 to 155 billion in 2021, up to about 15 billion from the previous year, and thanks to the abundant liquidity and sustained financing need among corporate and governments. So I want to leave that as a point of departure, maybe for our discussions to keep in mind the abundance of liquidity. So when we're talking about capital markets, we're talking about raising funds, and the ratings agency, through their research, they say, well, funds are abundant. So what do we need to raise? I think it's more a fact, and I think the presenters or my discussants will address that here, is how we acquire those funds, or being in the asset management space, how we manage those assets under management, and ultimately, how do we do justice as custodians of those funds to the stakeholders and our investors. So, to relieve myself from the table or from the stand here, I will leave you with this. To all four of you, in the different respects, how have South African asset managers been responding to these global statistics? And how have we seen our Islamic capital markets respond to the broader ESG investment strategies that ultimately speaks to the United Nations' Sustainable Development Goals? For that, I will leave you in the good care of Brother Abdulaziz Davids from Camissa Asset Management. Welcome.
Assalamu alaikum wa rahmatullahi wa barakatuh. Assalamu alaikum wa rahmatullahi wa barakatuh. Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Abdulaziz Davids. Firstly, I think I've had a lot of interaction with many of you, and just to clarify, on your bags is the name Camissa Asset Management. We're one of the sponsors of this conference, and many, unfortunately, we did a poor job in marketing our name change, because Camissa is actually the former Kieyam Asset Management, and for many of you, you might not even be aware that historic name for Cape Town. And Camissa actually means place of sweet waters. There's a Camissa river. And I would advise you to maybe go to the YouTube video. It's www.camissamuseum.co.za. It gives a nice historical background to Camissa, the history behind the koi name, and where it all comes from as well. So that's my plug for marketing. Apologies for that. I've got a few slides, but I know we're short on time, and also there's a lot of information to share. What I'll do is just flip through some of these slides, but I think fundamentally, and standing behind the podium because you can't be that interactive. But also what significantly, it's more important to look at the messenger rather than the message. But nevertheless, I think we've been on a journey since 2009 when we launched our then Afisa and now Camissa Islamic Equity Fund. And I think over the last 13 years in particular, what I've discovered is that our South African Islamic finance industry is quite interesting and unique, in the sense that we've got one of the most advanced, developed capital markets globally on the conventional side. I mean, our pension fund industry is unparalleled. It probably rivals just the UK. And Fatima has done excellent work at her company in terms of just highlighting the pension fund industry in South Africa. The challenge and opportunity, and some of the Islamic banking CEOs are in the room, some of the discussions that we've had over the last number of years is how to harness the capability and the power of Islamic finance in South Africa. The opportunity is, and just for 1 minute, I just want to indulge you with one analogy. And it's I don't have a great sense of humor, but this is basically a story of an imam. On the Friday khutbah, he goes to the Jamaat and he says, I've got good news and bad news. The good news is we've got enough money to finish our masjid. The bad news is the money's in your pockets. Similarly, in South Africa, we've got the opportunity in that our pension fund and savings industry is about 4 trillion rand. That's a massive number. It's much bigger than the Islamic banking system in South Africa. It's probably unparalleled in terms of the savings industry in Africa. The opportunity is that about 200 billion of that is Muslim-owned money. It's money that is, through hard work over many years, many decades, people have saved up. Unfortunately, the bulk of that money is sitting in conventional products. So the opportunity that we have as an industry is to how we can harness that money, channel it into Sharia-compliant opportunities and products, and actually make that money work for us. I always say that I like these forums, and again, credit to iConsult for hosting this, and I think we need more of these conferences in the future, because the opportunity is really how we can come together as an industry, both on the Islamic banking side, on the portfolio management and asset owner side as well, how we can harness that opportunity, because risk comes from Allah. We're not here to compete with one another in terms of trying to take market share. If we can grow this overall industry, which at the moment is sitting at 26 billion rand. So we've got 26 billion rand in these Sharia compliant funds, but really as of today, that number should be 200 billion rand. And with the help of people like 27Fold, hopefully, and asset consultants, we can have a situation where membership and Muslim members can be made aware of the opportunity to them. And so it's really that low-hanging fruit of turning the key and unlocking that potential. And just going into the slides again, I think what is quite important is that I want to leave you with 3 messages. And I'm not going to go through all the slides. Firstly, from a Sharia compliant point of view, Sharia investing and impact investing, or sustainable, or ESG, whatever you want to call it, it's actually very symbiotic. There's no inconsistency there. It's been done for over 1400 years. I mean, before the name ESG was actually bandied about, our Prophet ﷺ taught us about caring for the environment, making sure that we are responsible in our behavior, And effectively having those three levels of engagement in the environment, the individual, and society as well. So there's no inconsistency there. It's something that we at Camissa has been doing for 13 years. And I think, what you'll see in the next couple of slides is really how we've incorporated that in terms of our active portfolio and risk management processes as well. We all know the situation was started up a couple of years ago. And when we talk about ESG, and certainly more recently, impact investing has gained a lot of traction. But equally as important is the societal and social sort of impacts, and also the governance impacts as well. Even if it's just to try and mitigate and reduce the risk of loss to our investors. And certainly, I think amongst the Sharia funds, we probably had very negligible exposure to startup, and we probably fared the best out of that whole startup debacle of a couple of years ago. But that's really because of the three concepts: research, activism, and portfolio management and portfolio construction as well. What that basically means is that we as portfolio managers, and as Shaykh so beautifully put it, we're the custodians of your wealth, both in terms of contractual savings or discretionary savings as well. We've got a fiduciary duty to make sure that we not only deploy your capital in the most optimal investments and opportunities, but to also mitigate and reduce and actively try and reduce the risk of loss to you as well. And that's where ESG is very symbiotic and complementary to our research process. That can only be done if you have a very active research process. And that's something that certainly in the South African concept and landscape we've done for the last number of years as well. And be it from the due diligence that we do, speaking to, say, the mining companies, Anglo-American, to the banking companies in terms of Standard Bank, for example. But more importantly, once we are shareholders in those companies, it's very important to be active owners and to go to those general meetings, to vote on those resolutions, and make sure that our clients' voices are heard on those forums as well. And then lastly, from a portfolio construction and risk management point of view, what is quite critical is in terms of trying to actively produce returns for our clients by identifying potential blind spots. The previous speaker spoke at length about the Russia-Ukraine situation. It was quite a significant event. I mean, we probably put a probability of less than 20% on the events of February. But certainly we looked at it, and from a risk management point of view, we identified certain opportunities, and many of our portfolios actually have benefited over the last 3 to 4 months from the events in Ukraine. And I think that's our job as portfolio managers, is to not only look for areas where we can avoid loss, but also for opportunities as well. Now, something that we've developed at Camissa over the last 14 years is our own proprietary ESG scorecard. It's really an engagement tool, and it's something, these forums are very important, but the one aspect that is missing typically is the asset owners. Be it the investing companies that we invest in, or the management teams of companies as well. And we've got a duty to not only, I always say, you can either have a carrot or a stick. We prefer using the carrot. The stick can be quite painful, but also it turns people off. If you dangle the carrot, and we use our ESG scorecard as a carrot, so in this case we've got Omnia. So the Omnia company has certainly been quite an interesting company over the last 4 years. The share price went to about 200 Rand just prior to COVID. They had some working capital issues, and as a result of that, the share price declined to below 20 Rand a share. So we looked at the company. We were not investors, thankfully, at 200 Rand a share, but we actually underwrote the rights issue in November 2019, just before COVID came to South Africa. And at that stage, the company's entire market value was less than 4 billion Rand. Today, the share price is over 80 Rand. It's gone up more than 4-fold over the last 2.5 years. But this is an example of a company where they've gone through a troubled period. We actually use it as an opportunity to engage with them and to try and facilitate a much better working capital environment for them, but also harness opportunity that, especially from a sustainability point of view, that global markets have afforded the likes of Omnia. And today this company is at the forefront. I mean, Janine, this previous speaker, spoke about the Russia-Ukraine fertilizer market and how big that is. Omnia actually has stepped into the breach because clearly we are not importing as much fertilizer. We've got our own homegrown fertilizer companies in the likes of Omnia and ACI, and certainly through that opportunity, this company is benefiting as well. And that leads me on to the UN SDGs. It's 17 of them. for us as portfolio managers and analysts, it's important to be focused. And that's why we focus on 3 of them, SDG 7, 9, and 11. And what is important is that, again, this is complementary to our research process, but also very importantly, those are opportunities set available from the likes of Anglo Platinum, for example, that I think on Monday they've unveiled the first hydrogen truck that they're using at the Mohammed mine, for example, where carbon is clearly a significant issue, and their challenge is clearly trying to reduce the carbon emissions well ahead of the 2050 deadline. And certainly these are companies that we are supporting through investment and through engagement as well. Talking about engagement, this is a full spectrum of what we typically engage with companies on. So ESG is just one component of it. As I said, from us as portfolio managers and analysts, it's much more important to try and protect your investments. And that's why governance for us in the South African context is also quite important, as is the social impact that a lot of these companies, and admittedly, Sharia funds, we tend to have quite a significant exposure to mining companies as well. So the societal footprint of these companies is obviously quite pertinent as well. What are we doing as analysts and portfolio managers to look at the impact that our investing companies have on the environment? And what we then do as, once we invest in these companies, is to actually try and see how we can make a difference. And in the mining context, these are all companies that we currently have exposure to in our portfolios, Northern Platinum, Anglo Platinum, Omnia we spoke about as well. And you can see that, from an intensity point of view, Northern probably leads the pack. It's also quite big in our portfolio. And over the last 4 years, we've had extensive engagements. In fact, every quarter we have a call with the CEO of Northern Platinum. And based on our sort of interactions over the last 4 years, they've started to implement renewable energy in their plants. The new mine, Wesgro, for example, will be unparalleled in terms of its use of renewable energy, for example, water usage. So these are the efforts that we can do as asset sort of investors and portfolio managers to encourage better corporate behavior in the South African context as well. The last concept I want to leave you with is that in South Africa, our market is quite nascent. The first Sharia fund has only been going for just over 20 years. So in that context, we can always learn from global markets. And if you look at it globally, this is a study done by Definitive, for example. Sharia compliant companies typically have higher ESG scores. And that's really the awareness that has created over many years externally of South Africa. We're trying to advocate for that to come to South Africa as well. But more importantly, I think they always say the proof is in the pudding in terms of returns. And this is a study that was done, I think, from Malaysia. And comparing, firstly, going into the global sort of COVID pandemic in 2020, and then also coming out of that period as well. As we know, and Shaykh Ziyaat spoke about liquidity, we saw a lot of liquidity coming to the market. The US Fed, for example, cutting interest rates and also, doing the unconventional stimulus programs in 2020 to try and to stave off a big recession back then. All they've done is obviously defer it to the current period, and we've seen heightened volatility over the last couple of weeks. But that abundant liquidity theoretically should have lifted a lot of the non-Sharia funds, the non-impact funds, because of the high leverage that a lot of these companies have. But lo and behold, if you look at this graph, the top line, the ESG Sharia index, the red line, has actually outperformed the conventional ESG index coming out of 2020 by almost 15% over that period. And to me, that says two things. It certainly says that ESG funds and Sharia funds have delivered better results coming out of COVID 2020. But more importantly, by focusing on ESG, by focusing on where we're making the most impact, it can deliver superior returns as well. And internalizing that to the South African landscape, our Sharia fund has been going, as I said, for almost 13 years. It certainly compares very well with other conventional funds. Our conventional market is over 150 funds, for example. Our Islamic Balance Fund is in the top 5 funds in South Africa as well on a since inception basis. And certainly we've delivered in terms of that, the South African market as well. So in conclusion, I think just the last 3 bullets I want to leave you with. Firstly, Sharia investing, as we've said at the beginning, is in harmony with ESG. Stemming from the prophetic way that was established over 1400 years ago.
It's really up to us as active portfolio managers and investors to make sure that we incorporate ESG into our research processes and our engagement processes with companies that we invest in. And then lastly, as I've just demonstrated through that graph, Sharia investing has actually resulted in superior outcomes for investors, also incorporating that ESG orientation as well. I'm going to pause it there. I've saved you 30 seconds. Shukran. Assalamu alaikum.
Thank you very much, Brother Abdulaziz Davids. Perhaps before I call on my next guest, the speaker, just a comment which was centric for me in Abdulaziz's presentation is the build-up to the conference was always obviously sketching the design of the speakers, the setup and the flow of things. And there's the bankers that want more time, the asset managers that want more time, the Takafu guys that want more time, the regulators that want more time. But I think centric to your presentation is that we need everyone in the room to have a discussion. We need everyone in the room to become better. We need everyone in the room to be more sustainable. And you alluded to the banks enabling that flow of liquidity through to you guys. So value-based intermediation is as important as the asset management itself. So thank you very much for highlighting that. My next speaker or presenter is Fatima Vawda from 27-4. From my side, perhaps if you could take us through the principle of risk and reward, which is investment philosophy, but also from the maqasid of the Sharia, al-ghurm bil-ghurm, that the risk is reciprocated by reward. However, in our discussion today, we're speaking about the concept of beyond the risk and reward. So with that, I'll leave it over to Fatima Vawda to address us.
Okay, all right, perfect. So yesterday I was on the panel, the graveyard shift, as we were introduced earlier, and didn't prepare any slides. So last night went back home and decided, well, you know, I'm going to put some slides together and tell our story. So assalamu alaikum, everyone. Thank you to Abdul for the shout out. We're such a small community of Islamic practitioners in the market in South Africa, so collaboration is a big component of everything that we do, and working together to achieve good stakeholder outcomes. And Abdul's one of those guys who my team just love working with him, and it's really a good relationship. So thanks for that. I want to speak to you today from the perspective of an asset allocator. We represent some large institutional investors in South Africa and been active in the Islamic finance space for over 12 years. Being a practitioner in the South African asset management community for around 25 years, you can see I'm totally grey now. A lot has happened, and the markets have really changed in terms of the capital markets. And I want to introduce some of the alternative methods of thinking, and also some of the initiatives that we have undertaken to bring about innovation in the South African market. So I'm really glad that Wesgro went before me, and then Abdul, because they've really set the foundation for some of the things I was going to speak about. So kicking off, and the moderator spoke about this earlier. You know, everyone that went through matric or first year university knows about the capital asset pricing model and the way we think about risk and return. There's no reward without picking up any risk. And so if you think across the risk and return spectrum, we know, you know, the basics of finance, and everyone involved in the markets know that income is at the bottom of the spectrum, low risk, and then if you go to equities, you are talking about higher risk investments, and therefore you must be able to withstand the volatility in the market. Representing asset owners and investors domestically and globally, that is now changing. We do not just think across the two-dimensional framework. We don't just think about risk and return. We think about risk and return and impact. So the three-dimensional space is really important for us. and we need to be able to have the analytics and the metrics to be able to quantify that level of impact, and that is the demand by our clients. Our clients require us to, for every single investment that they make, we need to measure the level of impact that it is achieving in the economy. So when Abdul says on a quarterly basis, my ESG team contacts him and says, we want to know your fossil fuel exposure in the portfolio, we need to understand the fossil fuel exposure in the portfolio so that we can report back to our clients. Our clients are signatories to the UNPRI, and also with the retirement fund legislation requiring ESG to be taken into consideration both under Reg 28 of the Pension Funds Act as well as various other pieces of legislation. It's a core component of everything that we do. So if we just look at the capital markets, and the capital markets, across the spectrum that we invest in is the listed markets as well as the private markets, and the level of ESG adoption and integration across these different markets varies. Nothing is a one-size-fits-all when it comes to ESG and impact investment. Abdul spoke about engagement, shareholder activism, proxy voting, using your power as an asset owner to influence the way companies are managed. And that BlackRock, the world's largest asset management firm, over $12 trillion in assets under management. Larry Fink often speaks about how we can change the way in which companies invest through shareholder engagement and activism, and that's a very powerful tool that we use in the market. But increasingly, there are other tools and mechanisms that we can use to achieve the level of impact. And if you look at historically Sharia-compliant investments, Islamic finance has always used negative screening, and that's been adopted by quite a big component of the conventional market. And where there are areas that, for example, in the fossil fuel space, a lot of engagement is happening on that side. So an example of that is recently a group of asset managers got together and we tabled various types of special resolutions at the AGMs of listed companies. One of them is Standard Bank, where we look to ask some of the directors on the back of the just transition and climate change concerns. I always show people the picture on the right-hand side, the lines, and that's a very, very powerful picture because it demonstrates the change in global Earth temperatures over the past 20 years. Well, actually, this one takes it all the way from 1910. And what we can see from this is that temperatures in Southern Africa have risen by twice the global rate. Africa is less able to cope with those effects of climate change. We saw that in KZN last month, and 60% of the world's most vulnerable spaces are based in Africa. So climate change is a real issue, and as asset allocators and investors, we are very active as investors to ensure that capital is allocated in an optimal way. Moving on to, I know that my colleague from Wesgro spoke about this morning, but the amount of available capital, this was done by Business for South Africa at the onset of COVID to actually calculate the amount of capital that's available in South Africa, both across banking and insurance institutes, as well as the collective investment scheme space and the total savings and investments industry. We're looking at close to 15 trillion rands of assets that's available for investment, and therefore we can use this level of investment actively to achieve the level of impact that we're looking for. And that was again mentioned earlier this morning, a place that we all actively participated in and was hugely successful was the Renewable Energy Independent Power Procurement Program. We know that in the first few rounds, a lot of the financial institutions in South Africa did really well out of them, and the next round has been announced. But most importantly, it's not only, and this is what I want to lead into, is that impact is not only achievable through the listed capital markets, and increasingly we need to look at the private markets to be able to achieve the level of impact that we're looking for. Importantly, most or all of the institutional asset managers that manage money on behalf of institutional clients subscribe to all of these codes and standards. They can be very complex, they can be very different. We try and push for standardization as much as we can. We sit on various bodies and programs, and it's very, very difficult from a practitioner's perspective to meet all of these demands because the cost of compliance is rising. I mean, we've got a 6-person full-time dedicated ESG team. It's expensive, but we've got to have it, and continuously the codes and the practices are changing all the time. Most institutional asset managers in South Africa, we are signatories to the UNPRI, which bill us in sterling, and with the rand sterling rate of 20-1, it's quite a costly membership that we're part of. And then locally we have our own code that we've been involved with through ASISA, of which I'm a director on, and we have a committee called the Code for Responsible Investment in South Africa, Climate Change 100, Climate Action 100. We've engaged the world's top 100 fossil fuel companies, and recently spent quite a lot of time engaging the board of ASCOM on the just transition. What Abdulaziz showed you a moment ago was the way we report, and those are based on global principles, the task force for climate-related disclosure. So lots of standards, lots of principles that we've got to meet in terms of how we monitor and report on impact. But what I want to move on to, and this is quite an important discussion, and having been in the markets for as long as I have, when I started in the financial markets, we had around 800 shares listed on the Johannesburg Stock Exchange. It was fantastic, lots of liquidity, lots of diversification. Today we have just under 300 shares listed on the JSE, and Abdulaziz will tell you that it's a very concentrated market. Our universe has shrunk quite a bit. And this is largely as a result of a whole lot of different factors, but it's also been the trend internationally where the increasing appetite has grown in the private market space. South Africa's institutional retirement fund legislation is about to change. Government is now allowing 45% of compulsory assets to be can be invested in private markets investments, such as infrastructure, to support the growth and development of the South African economy. So the private market space is growing aggressively, all the way from venture capital to private markets to infrastructure, with the establishment of the infrastructure fund through the presidency, through Dr. Mapopa. So lots of exciting things happening, and this is really a fantastic opportunity for the Islamic finance industry to be involved in, to be part of the capital raising initiatives, but also part of the deployment, and I'm going to give you an example of that in a moment. Just to also give you an example is that we can't really only spend all of our capital chasing 60 liquid shares on the JSE. There's a lot of opportunities in the South African economy, all the way from the bottom, and I can see there's 594,000 companies in that lower level. There's 73,000 companies from turnover. So a huge amount of companies in the unlisted space. I mean, a lot of you know these type of brands. They're all unlisted companies and they have raised capital through the private markets. And the JSE's actually set up a separate segment to do private placements in the unlisted space. And from an institutional investor's perspective, we're increasingly looking at the private market space because it's not correlated to the listed markets. I mean, look at the last 3 weeks. It's been a bloodbath on global financial markets. All of the exchanges are down. China is down in excess of 30. China was down, I think, about 30% just in March alone. If you were invested in emerging markets, you know you would have seen your money decline quite substantially. And people are looking to alternative sources of investment return that can be very, very favorable, achieve the necessary socioeconomic impact, but at the same time deliver those investment returns and provide you with uncorrelated investment returns relative to the listed markets. So massive area for growth, and South Africa to rebuild the country, what we are seeing prevalent across the board. I've got a colleague sitting next to me from the DBSA and the IDC, and all of the DFIs are focused on blended finance opportunities, really using catalytic capital to attract other institutional capital to support collective investment in the economy. So yes, it's going to 45%. So Reg 28, any Reg 28 fund, 45% can be invested in unlisted assets. Yeah, so that's the Minister of Finance announced that, we're just waiting for it to be gazetted, but it's pretty imminent. So with the establishment of the infrastructure fund, we have to allow the policy to ensure that we're able to do that. Okay. So blended finance is a big thing. I mean, we've been involved in a hugely successful blended finance program through National Treasury. We got catalytic capital through the National Treasury, and we raised 5 times matched funding against it. So collectively, we've now deployed about 4 billion rands into the private market space. We've created in excess of 8,000 jobs. We've supported 34 companies in the private market space. And all of this is about impact. We have to report and monitor on the level of socioeconomic impact that we're achieving. And it can be done, it has been done, and we've demonstrated through National Treasury's partnership with 27 core investment managers. We've deployed capital into the real economy for job creation and upliftment of communities across the board. And to be quite honest, some of the spaces you can only use the unlisted markets to attract capital in those spaces. The renewable energy space, it's very, very hard to attract capital in the listed space. Some of the projects that we've been involved in, we've invested in hospitals in rural and peri-urban areas where listed companies refuse to go into. We've gone into those spaces, we've built hospitals in those spaces and created jobs for nurses and doctors and for communities that can get access to healthcare in these spaces. Education, one of our portfolio companies in the Free State is a company called EduLife, where we've brought education to the areas where the other private schools don't want to go into, creating jobs for lots of teachers. And with the focus of going into communities that are underserved, we've been able to achieve the level of impact. A lot of research and collaboration. Last month, we launched the South Africa's first asset manager ESG survey, where from Old Mutual to 91 to Camissa, everyone participated in the ESG survey, and we looked at the level of integration in ESG, and pleasing to say that a lot of the asset management companies in South Africa score fairly highly. And we need to be careful about greenwashing in this market. It's a huge risk. The MSCI, I think, cancelled probably about 3,000 funds 2 months ago because they called themselves ESG funds, but they were all greenwashing, and boom, MSCI just cancelled them. So it's very important that people don't get onto the bandwagon of using it as a buzzword, and we've got to be careful in terms of what we do. So very, very exciting from our perspective. We will be knocking on all of your doors. We are oversubscribed at the moment. So we've raised our capital. We're going to be listing a 10 billion rand note program on the Johannesburg Stock Exchange. It's South Africa's first sustainability sukuk. It's an Islamic finance instrument. Thank you to the Sharia board who's worked very closely with us on this. It's going to be Africa's first sustainability listed instrument, 10 billion rand note program on the Johannesburg Stock Exchange in rands. We're looking at a hard currency listing on the London Stock Exchange. So pretty excited about what's happening in this space. The first issuance has been oversubscribed, but we are going to come and share information with you. I think what's really driving through the South African investor space in the Muslim community, and I've got to put it out there, is confidence in domestic Islamic finance. There's been huge issues related to governance with unregulated investment vehicles, and we need to protect our Muslim community from these type of investments. So we have chosen to go through the biggest African stock market, the JSE. It provides investors with the level of confidence that you require to put your money into an instrument, achieve the necessary impact, ensuring that you get the level of comfort that you need through a regulated investment vehicle. And we hope that this is the start of something new and exciting, and it will catapult other financial institutions to also use the sustainability board of segment of the JSE to list other instruments. Most importantly, it will be Africa's first JSE listed sustainability linked to cook. It's going to be in the agriculture sector. Food security is a huge issue in South Africa, and deal pipeline is really those farmers that our colleague from Wesgro spoke about, where we can really promote the export and increase the export of South African agricultural products to global investors. And we look forward to knocking on your doors and coming to tell you more about the listing. The prospectus will probably be published in the next couple of days, and we're really excited about this. Thank you very much for the opportunity. I took up too much of your time, I'll pay you back. Thanks, guys.
Thank you very much, Sister Fatima Vawda. Unfortunately, time we can't pay for him.
In the pension fund.
Inshallah. A lot of comments. I think I'm going to save it after the presentations. I'm going to call up one of our bigger, or let's rather say, older asset management or institutional investors, Kieyam, Gamieldien, representing Old Mutual. You normally say when you're raising a child, you think, okay, when he gets old, it's going to be easy. But I was told that's not true. So let's hear it.
Shaykh Ziyaat Isaac, Fatima. It's always a challenge sitting with competitors on the stage, partly because you're worried they're going to steal your thunder. So from myself, Kieyam, Assalamu alaikum. Good afternoon to everyone. It's a pleasure and a real honor to address this community, if I can call it. There's unbelievable scholars in the audience, unbelievable experts in the audience. So that's my caveat. I'm really the manager of some of those experts in the industry. So my talk is really going to overlap to what Abdulaziz and Fatima was speaking about. And before I lose this thought, I was speaking to Shaykh Ziyaat about this, is that we really need to establish a national body overseeing or collaborating on Sharia investing. That's really a thought that I've been having for quite some time, because as I stand here, the overlap and the collaboration that can work, albeit with competitors or others in the value chain, is significant. And we need to coordinate that bit as a community for us to really reap the benefits of that. And perhaps this conference will spur on Shaykh Ziyaat to establish that community more formally, because I do feel it's something that's sorely needed. Just from my presentation, what I really want to express, I've got a colleague here, Fawaz, can you just put up your hand? I'll make reference to Fawaz. My other colleagues are not here. Sadiq, Salam, some of you might know him, and Maib Chakut. Those are really colleagues that's in my team who are managing the Sharia funds as well as the ESG funds. And so my talk is really going to create this intersection between Sharia investing, ESG investing, and impact investing. And I think that's really for us to think a lot deeper about. I'm quite interested to hear a lot more about what Fatima's presented earlier around the listing and support fund. Let me jump straight in, and maybe just for context, not really for marketing. This diagram really shows our place in the world in the broader mutual group. As you can see, right at the bottom, in the middle, is all mutual customized solutions. What I really want to express is a whole array of investment capabilities. The two that I'm really going to focus on is listed equity. And second to bottom in that row, you'll see all mutual alternative investments, so it's the middle one. And you'll see the reference of that. So that slide is really there for that particular purpose. With regard to the portfolios that we manage, again, just to highlight, I think Shaykh Ziyaat, we said 170 billion, I think it's 200 billion, but after the last week or so, it's probably back at 170 billion. So we managed about 200 billion of assets. A large chunk of that is indexation funds. We are the second largest index manager in the country, behind Satix. And of that 131 billion that we manage in indexation, 33 billion is in ESG index funds. That's significant. 33 billion in ESG index funds, where you've got capital allocators allocating 33 billion to ESG index funds. Supplementary to that, we've also got the Sharia offering, and I'll touch on a bit more detail later, of about 8 billion. And then we've also got, and the reason why I asked Fawaz to raise his hand, he established the first active ESG equity fund in South Africa. It's currently in incubation, so it's got a 3-year track record that it's seeking. I think it's in its 2-year, just over 2 years now that it's running for us. And so you'll see also why the same team that's managing the Sharia funds is also the team that is actually managing the ESG funds. Just moving on very quickly. So this is an Islamic conference, and so that intersection with I saw Sheikh Mohammed here as well. We'll probably do a much better job, and Shaykh Ziyaat a much better job at this. But I do encourage you to actually go and see the talk from Sheikh Hamza Yusuf. I'll send the link to Shaykh Ziyaat and you can forward it. It was done in 2014. We expressed three purposes of human existence. Now, I'll jump straight to number 2, because from a tradition and Islamic perspective, we know number 2 is the main purpose, right? It's to worship God, and these are all ayahs from the Quran. The references are there. Surah 5, verse 56. Allah, I only created the unseen beings and human beings to worship me. That's our main purpose. But supplementary to that, we live in a world of cause and effect. And so if you look at purpose number 1 that Sheikh Hamza expressed, is earth cultivation. Now this was in 2014. It's actually a talk on climate change. And it's quite interesting that it was spoken about in 2014, and I think it's only more recently that ESG became sort of a label that a lot of people talk about. You'll see in the first purpose that he expresses there, it was God who brought you into being from the earth and settled you therein to cultivate. It's quite amazing what Fatima has just spoken about around the agri-fund that they're going to list. And I mean, it goes without saying that beyond a business purpose, you are also achieving a Islamic or a religious or a divine purpose, whichever religion you belong to. And so we need to see this, we need to see Islamic investing, ESG investing, both from a commercial perspective as well as from a religious perspective. And in stewardship, I mean, not too long ago, nobody heard the word stewardship, right? It's only now that you find out about listed stewardship, listed equity stewardship, etc. But within the context of our religion, it spoke about God making you successors to steward the land, to see how we behave. And in the arrow you'll see it talks about placing us in the earth as a steward. I'll just pause there for some reflection. Just going straight into, so what do we do? So we basically have Sharia funds, we've got ESG funds. What we basically do is provide accessibility. As an asset manager, that is our job. We try and do it to our best of ability. With that, obviously there needs to be transparency, and we also try and achieve choice. So within our ESG offering, we've got ESG integration, that is existing funds. Abdulaziz spoke about ESG integration. We do similar integration in our Sharia funds, where ESG is a core component of ESG in the Sharia offering. We also have dedicated ESG capabilities, and you'll see from the next slide, I've touched on indexation. We've launched the local SA ESG equity fund, and we're soon to be launching the global ESG equity fund again under Fawaz's direction. And then one aspect that we're also looking at, and I think just pivoting with what Fatima was mentioning, is around thematic investing. And again, thematic investing allows for different flavors. As human beings, we all have different preferences, and thematic investing is really there to cater for those preferences. Just from an offering perspective, I'm not going to touch too much on this. I've spoken about it already. I'll jump straight to this, and this is what we believe strongly will be the change in context. So currently on the left, we've got traditional investment, and then we've got sustainable investing. We've either got negative screening or integration or active stewardship, etc. We do believe that the future is heading towards sustainable investing being the traditional offering. Now, it's in our best interest as humans that it is, because where capital flows are, that is really where activity is going to take place. And so our thesis is really based on that premise, and as Old Mutual Investment Group, we do position ourselves, obviously, to ensure that we can give investors that choice. Just from a broader listed equity, I'm going to touch on all the items, just on some of the specific ones. We've touched on responsible themed investment. That's where we will look to partner with other players in the industry. We've got a fully manned people, or staff, team that looks after responsible investing, and they really partake in stewardship. They do proxy voting on behalf of all the investors that's in the funds. As mentioned, we do in ESG integration in our Sharia funds. We've got impact investing, and I'll touch on that aspect because that's also the pivot between Sharia investing as well as ESG investing. And then there's a whole host of other things. I'm not going to go into all of this. I was going to speak a bit about the active ESG fund. I'm not going to go into a lot more detail. I think Abdulaziz, you did a very good job in expressing what ESG investing is all about and how do we, Camissa, obviously, how they incorporate it. It's no different to what we do from an Old Mutual perspective. So I'm just going to set out what our investment philosophy is from an ESG equity fund. And here we do believe that responsible investing or sustainable investing can provide outperformance over the long term. That is a fundamental belief. And so our investment process is built around that. So companies that are affected more by climate change are going to struggle. Companies that are allocating irresponsibly, or Steiner was mentioned, that's got governance issues, they are going to falter. Maybe we don't identify all the companies, but definitely the aim is to identify most of the companies that can be highly rated ESG companies as well as lower carbon intensity. Now, in the South African context, it's obviously a challenge because we're quite a carbon-intense economy. So one does have to take cognizance of that one does not throw the baby out with the bathwater. In the global context, just Google how many nuclear power plants are there in the Western countries compared to Africa. I think there's only one in Africa, it is on the West Coast. So it's easy for the Western countries, or the more developed countries for that matter, to go carbon neutral because they've already done that over the last 20, 30 years. South Africa is going to take a slightly different direction because our economy is coal-based. I mean, you can't take Eskom out of the equation. I think Sasol's doing an extremely good job in transitioning into sort of lower intense energy solutions. So do not see this low carbon intensity activity to take place overnight. So that's really the main message I wanted to land with. I'm not going to go into all the detail of how the fund's constructed. Just to touch on the Sharia offering, so we've got 8 billion rands in our Sharia offering. Those competitors with Camissa, we're in good company, I might say. We've got the equity fund on the left. We've also got the Al-Baraka Al-Mutual Balance Fund, and we've also got the Islamic Global Equity Fund, as well as the Income Fund. And I'll touch on how one can use these vehicles as a pool of money to invest with impact. Just one interesting stat, and I thought for us very quickly to pull this together. There's a strong overlap because we run ESG funds separate and independent from Sharia funds. There is a strong overlap based on our analysis. I think that echoes what Abdulaziz was saying as well, between ESG and Sharia investing. The obvious differences is in the banking sector. Obviously, the Sharia funds don't necessarily invest directly into listed bank shares. Neither do they invest, obviously, in tobacco products. Whereas an ESG fund could potentially invest in bank shares. Another carve-out or area where there's no overlap is in oil and gas. So obviously, the ESG funds are prone to wanting to avoid those stocks, whereas the Sharia investment funds don't necessarily carve it out from a Sharia perspective. But it's suffice to say that there is a strong overlap, hence why we have structured our investment team to cover both areas. It's not independent from each other, and you'll see also later why that is the case. So I was away over the weekend. I stopped at the garage. I didn't have this magazine for a long time. It's actually only a couple of days. And it's quite interesting, on the cover of Farmers Weekly is the importance of why livestock are crucial to future food security. And so again, Fatima, excellent opportunity that 274 is making available to the investment community to partake in this industry. And I think from I dare say without stats, from a Muslim or Islamic investment perspective, we've underinvested in farming. And if you reflect again on those verses that I've quoted, it's almost going back to our roots and going back to where we eventually end up one day. It's in the ground and back to our Creator. Then maybe just to bring it home, and I'll end up with this slide. So what are we currently doing? So currently we are looking at a couple of opportunities, and this is really where we are trying to use our income fund as well as our conventional balance fund to invest in unlisted impact opportunities. So you'll see on the left, and Matthew is in the audience, we've been having discussions with people around how do we partake, for example, in cattle farming. There's a lot of farmers out there that perhaps cannot get access to finance, and our income fund is able to partake in that industry by providing funding to farmers, and effectively the income fund receives a rental. So that's one type of solution that we are exploring. It is in its due diligence phase, I might say. The other opportunities, and this is just pivoting back to that initial slide around alternative investments in mutual. Currently, there are significant alternative investments undertaken by our mutual investment group. There's a significant fund in renewable energy. It should be infrastructure, sorry for that spelling mistake there. Infrastructure, toll roads, broader infrastructure like dams, into Africa as well. There's also a fund, the DBSA is here, they would be aware about the Housing Impact Fund. So it's a fund that was aimed at developing low-cost housing, and there is a rental model in there as well, as is the case with the schools fund. And so all these assets already exist. They are considered traditional, alternative, unlisted assets, but with slight adjustments, they can be amended to cater for a broader Sharia investment offering. And so what we're trying to achieve currently is how do we link our current offerings in the listed space and in the unit trust space and in the segregated mandate space to invest into these existing funds as well, and additional funds that is being listed as Fatima has mentioned. And suffice to say, from my perspective, I think that is really where, beyond the confidence, I think the various role players actually need to come closer together and workshop how we can create access, not for ourselves. Remember, the comment I made earlier is really to provide access to investors. Our job is we're not the capital owners. We are stewards of the capital owners. And so how do we create those opportunities for investors to partake in these impact opportunities, which is generally unlisted and which is usually difficult either for the man in the street or the woman in the street to actually get access to. And so I'm hoping that some of these thoughts will spur on some engagements, either with myself, with Abdulaziz, with Fatima, and potentially Shaykh Ziyaat, that discussion we had around setting up this forum, this working forum, that we can really take Sharia and impact investing to the next level. Shukran.
For the presentation. I think what's beautiful and coming through is the camaraderie and support that we have from competitors on the stage. So thank you very much for the presentation. And thank you for giving me a platform to lead into the next discussions or panelists presentation or talk. Is you mentioned that as capital owners or stewards of capital owners' money, ultimately the investors, our next panelists will address the impact required.
You know, Fatima, I wasn't going to mention it, but she said I must remind the audience that Al Mutual Investment Group actually won the Sustainable Investment Asset Manager Award. Fatima, thanks for that.
Being beautiful and support on the stage. So continuing, looking now, we spoke about, we heard from the institutional investors, the stewards and the custodians managing those funds and the capital that is brought to the table. We now maybe take a different perspective or vantage point insofar as listening to the investor's perspective and the role the investors or owners of capital play in the sustainability of ESG investments and sustainable goals. For that, I call upon Brother Mohammed Vadee to address us.
Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillahirrahmanirrahim. I'm sure by now you figured out a bit of the outlier from this group. I think Sheikh's kind of introduced why I'm here, and hopefully I can share some perspectives firsthand in terms of market perception and how we're treating the good news that we've been hearing over the last couple of minutes and how it's been perceived from a market and customer perspective. So firstly, I think let me take the opportunity to thank Shaykh Ziyaat and his team from iConsult. I think what is, for me, a milestone event. An event of this magnitude for me is something pioneering, hopefully is a first of many, and inshallah we sit here in a year's time and we look back at the fruits of this event and we're able to measure ourselves against the success of implementation against what we've heard. So mashallah, Shaykh, and I think we look forward to next year's. If you didn't get that, I'm looking forward to next year's event. No pressure. But I think maybe just before I start off, positioning Al-Himayah. It's not probably a renowned name such as my esteemed panelists here. So Al-Himayah is an independent brokerage. We part of the Old Mutual set, and as Kieyam here presented, Old Mutual is quite a complex organization. So somewhere in between, we lie there as an independent brokerage, and we have the responsibility of bringing Sharia solutions to investors. And alhamdulillah, we've been recently established, and all I can say is the need is definitely there. And through its naming protection, we're hoping that we fulfill our responsibility by not only protecting the investors' money for this dunya, but inshallah to the akhirah as well. So I'm going to touch on three perspectives today. I don't have a presentation like my colleagues, so I have different things always. But I'm touching on three different aspects. One is around the conscious investor, or conscious consumer. The second is around the social reforms that we're seeing in terms of being an accelerator for the SDGs. And the third one is around integration. So if I speak about a conscious investor, and I must position this, that there's never been a time in history where the market consists of such diversity. We're sitting with the largest age group of a market ever experienced in terms of commerce. You have people who are living longer and have more money to carry them through their livelihood. And you have 16 and 15-year-old millionaires who have just hit crypto. So the needs vary across the pendulum. And I feel for my colleagues here, because all of a sudden you've got to appeal to the entire spectrum of the market. The second thing is, consumers are not shy to ask why and who. Gone are the days where they would look at the fact sheet and look at returns. It's no longer about that. They want to understand the mechanics of the funds, where it's going, where that company is actually using what their value chain and supplier chain looks like. And if that CEO doesn't recycle his rubbish on a Tuesday morning, I'm not prepared to deal with that investment fund. So there's a heightened awareness. And we shouldn't underestimate the influence of the customer and what that is driving, or the investor rather, than what is driving in this particular industry at this point in time. Yesterday we heard a lot about the value-based sort of measures that many companies are taking. But there are many aspects in terms of companies in question, and they're very unconventional. And we see some of the highest market cap companies falling down against things which are very unconventional. Data privacy, CEOs finding themselves on the wrong side of things. And those are massive influences in terms of where investors now take their money and invest it into. I mean, a simple thing is to say, if you want to please everyone, go sell ice cream. That's no longer the case. Now it's about what milk are you using. Are you using almond milk? Are you using pasteurized milk? Are you using it that's extracted from trees? So the complexity in organizations is a lot more than what it has been in the past. And this notion of trade-offs is no longer being acceptable. No longer can I take lesser returns if I'm supporting my ambition on sustainability. It's now looking at both of them. I want to be investing my money in sustainable causes, but similarly, I want the returns that are due to me. And I'm not going to accept if it's compromised in any way. And there's this emergence in corporate where you see now chief sustainability officers come about and they have a seat at the top table. And this just gives you the perspective of how important this topic is. No longer is CSI, the marketing department, where they're now only going to put a few boards within schools. It's now a top agenda item. Companies are starting to recognize the seriousness about sustainability and what does it mean for their longevity, their customer, and ultimately their growth. And lastly, we haven't spoken about social media and its influence. But gone are the days where the shenanigans of companies are hidden within the back pages of the business day. Social media now exposes everything. So customers and their heightened awareness in terms of who they're dealing with is known. Companies no longer can hide certain things. And what went from being, applicable to a few people who hug trees and no disrespect to anyone, but now it's everybody's problem. All of a sudden, it's cool to save the planet because certain social influencers are advocating certain things. So the heightened awareness about something which has been bottom drawer has now come to the top. And the second aspect, or the second part of my talk is around the social reforms. And what is this doing in terms of prioritizing the SDGs? Now we know 193 member states have signed up for this. And we know it's quite comprehensive. 17 different goals, it covers everything under the sun. But countries no longer have the ability to influence in terms of what's the priority. It's being driven by social society. And they talk about a 3-layered cake when it comes to the SDGs. And these are the 3 pillars of sustainable development. One being environmental, the other one being social, and the third one being economic. Now these mean different things to different people. And depending on which society or which community you're within, it actually drives the agenda and the prioritization of those needs. So we see large-scale movements in terms of social society, in terms of addressing what is most important to the vulnerable first. We don't need to look far other than what transpired in KZN a few months ago, where basic needs became topical and the highest point of agenda needs, and that drove the country and policymakers to think about things very differently. So no longer are the decision makers within countries saying, from these 17 goals, these are the most important, and these are the ones that we are going to address. There's no use with reporting on clean carbon emissions when in actual fact the nation's going hungry. It just doesn't make sense. So you're seeing developed versus developing countries, although marked with the same scorecard, having fundamental different approaches in how they're dealing with refugees. And there's no script to effectively tell one or the other how exactly to do it, because no country today has achieved sustainable society. So the 17 goals themselves are actually interrelated. So it's extremely difficult to determine which ones we should be doing and which ones we should be doing last. When social society and social reforms decide to interact on certain particular aspects, it influences the rest. And all of a sudden, there's a lack of control from governments in terms of what does it mean. And we're seeing large movements of democratization of industries taking place. Now this transpires from things like travel, applicable for all of us here, finance, and even things like data sovereignty. So you're now seeing consumers almost dictating what's important to markets and how that needs to be respected and acknowledged before decision makers are actually doing anything about it. And the last of my 3 points is around integration. And this particular aspect is about dealing with what we're talking about here over the last 2 days and bringing it into our everyday lives. Now, integration in itself is one of the 4 key principles of the SDGs. And this is where I see innovation and technology coming to the fore. You know, technology can play a significant role in itself in bringing lots of access to information. But we need to treat something this powerful with a lot more delicateness and be able to direct it in the right manner. And as Winston Churchill said, you know, never let a good crisis go to waste, rather. COVID, with all its disguises, all its guises and all its pitfalls and all its challenges, what it did do for the world is actually accelerate technological and digital advancements. And we need to embrace that. We've seen worlds collide, be it physical, digital, and we've seen them come together in unprecedented ways. We need to keep that momentum up in terms of how we integrate these SDGs into our daily lives. No longer can this be done as an aside, measured and aside. If we're really going to take it serious and adopt it, it needs to be a lot more integrated, and technology provides for that particular platform. And I'll end off and hopefully share you some time soon, but last few points from my side is we need to realize there's less than a decade left in terms of achieving these goals. This was formulated in 2015. Its objective and target date is 2030. We're well behind the curve. I think many of us are here acknowledging and understanding that we are behind. We've got less than, or just under 8 years to do what the globe anticipated to do when it comes to this SDGs. And the key element is create the sustainability that we look for in terms of the longevity of these particular goals. So we must recognize that probably the greatest theme across all 17 goals is actually inclusiveness. And in a world that is really looking for every reason to be exclusive, it leads me to the hadith of Nabi Sallallahu Alaihi Wasallam around the best amongst us, so the best amongst you, are those who benefit mankind. And we can't underestimate the role that each of us play in our individual capacities, and more so in a professional capacity with all the institutions that we represent today to create that inclusivity. The goals determined, the works that we see happening, needs to uplift more and more and bring everyone along with them. This morning's session opened up with about unpacking the goals, and one of the statements made was, leave no one behind. The success of these goals and what we're seeing and witnessing today here in terms of where investors go has a lot to do in terms of the upliftment, generally speaking. And let me leave it as that. So shukran, I've saved you 4.5 minutes.
Thank you very much, Brother Mohammed. If I can give some guidance for the two immediate the future of Islamic finance, or in particular the capital market, or Islamic capital markets in South Africa, and how do you see, what do you see need to do as a some finance community in South Africa to be better. For my father, speaking more to the custodianship of the owners of the capital and the investors like companies using what are the recommendations of how institutional investors should then address the points that you have raised in your last answer. So Abdulaziz.
Assalamualaikum warahmatullahi wabarakatuh again. I think very importantly, and the key theme from this session is really that we've got the technical ability, we've got the technical knowledge, we've got the expertise, and very important, we've got the track record in this industry to really harness. And I love the way our brothers just mentioned now, is that we can be more inclusive. And I think, certainly from Camissa's point of view, we've done a lot of work in terms of internalizing the processes, making sure that we deliver best-of-breed sort of products and also returns to our investors as well. Now's the time for us to go beyond just the individual organizations and work together as an industry. We already have so many headwinds as an industry. We don't need to have this competitive, exclusivist sort of approach. And with forums like these, I think a lot can be achieved in the future.
Yeah, I think just this conference has really sparked a lot of ideas, and I think what we're going to do when we get back is it's time to set up a kind of group of all of us where we regularly meet, we collaborate, we engage, and we make our contribution collectively.
I think from my side, Chef, it's about recognizing there's an ecosystem. It's in its entirety. And it's time for, like any ecosystem, the strength lies in the uniformity, in the vision, in terms of what we set out for ourselves. And we no longer, I think, as an industry, as a sector, in terms of Islamic finance, find ourselves in pockets. If you look around the room, from academia to training to institutions, etc., it's the entire ecosystem that is now coming under one. I think we need to recognize the role of each of us here in terms of bringing that to the fore and establishing a sector that's very meaningful. We heard the numbers. I think we can see in terms of the opportunity and what's there. It's about acting more uniformly in terms of what the objectives are. I think that the alignment with what this conference in particular presented around the SDG anchors us around what we should be working towards. It's the actions that each of us will now take in terms of achieving those, and by its nature, by its name, sustainability is what we're after. We've got to be sitting here today in this room, thinking about 20 years from now, the people who will be sitting in this room. Was this a monumentous event that kicked off certain actions that as a sector, as an ecosystem, we mobilize certain things that actually advance in time? And that's, I think, probably my parting words in terms of the responsibility that each of us have from going here. But let's not take the spotlight. I think everything around us is ready for that spotlight. It's up to us to step into it.
Thank you.
So just a couple of closing comments from our side. So I thought I saw stepping in, sorry. 25% of our clients that's invested in the Sharia fund is not Muslim. And so we need to take this narrative beyond just Sharia and Islamic investing. It's actually ethical investing. And it says so on the banner. It's not mutually exclusive. We are bringing something that is acceptable to humankind and not necessarily just Muslims. So I just wanted to drop that particular comment as well. And then I think definitely from our side is the inclusivity that we need to take out around Sharia investing and ESG investing and impact investing. I think from a community perspective, we need to create the vehicles for people to partake in impact investing. And it talks to the liquidity requirement, it talks to the collaboration requirement for the banks. And so there's quite a lot of work that needs to go in. And Fatima, I definitely agree, we need to set up a formal structure to take a lot of these actions forward. Otherwise, we get to the conference next year. We might not be on the stage because we'll be embarrassed because we haven't achieved anything. And there might be other speakers. So I think we need to take the talk to the obvious next stage, which is action. Shukran.
Ask the Almighty to bless us with all the praise, the communications made here, and thank you all for being a wonderful panel.